Hello, I'm Robert, and welcome to my channel, where I talk about everything automated algorithmic trading, or simply algo trading. Today is going to be a busy day as we're going to go deep into the techniques that I've been talking about over the last several long videos with hyper-aggressive grid trading. And a subscriber, Racing Tail, asked about where the software can be downloaded and whether or not it was actually available. And it is, and I'm going to go through the process of how you can download this software to your Linux VPS and actually test it for yourself. So let's get straight into the video and go from there. My grid bot is built on the Jackrabbit Relay framework, which I also wrote, but this is completely open source, so you can download it to your VPS simply by following the directions it provides you through its wiki. The wiki is quite elaborate and covers a large amount of details, including step-by-step how to download and install Jackrabbit Relay onto your VPS. It also talks about the requirements, so forth. So you will need a fully functioning relay system for my grid bot to work. Now let's talk about how to get to the grid bot itself, the actual source code that I update aggressively and regularly on your drive so that you can actually test it with your own OANDA demo account. In order to get the grid bot software, you need to be a sponsor of Jackrabbit Relay. While open source is free to use, unfortunately it isn't free to develop. And sponsors have been the reason why Relay is where it's at. The sponsorships are an invaluable tool to help me pay for all of the goods and services necessary to continue this level of development and analysis. And I do need to say in full disclosure, because of recent news events with FTX and other entities, I take my sponsors very seriously, and all sponsorships go strictly towards the continued research and development of this software. Nothing else. I make sure that I provide value for your sponsorship, and I make sure that every penny you provide goes to making this product better. So to become a sponsor, you simply click on the sponsors button, and then you click on sponsor. You could go through my Patreon link, but this is the fastest way. Once you click on sponsor, you'll be taken to my sponsorship page. And then from there, you pick the tier that you are most comfortable with. GitHub does require that you be a recurring subscription in order to get access to the private repository. So pick the one that you feel comfortable with and go through the process that GitHub will lead you through. Once you have gone through that process and you are a sponsor, you will get a welcome message from me with the sponsorship private repository. And that will give you access to all of my active code, logs, everything. Now, when you first get to the sponsorship, you'll probably be on the main, which looks like this. It gives you complete directions on how to install exactly what you want. For the purposes of this video, we're only going to focus on the Oanda Grid bot. There's a lot of content here, well over 5 gigabytes of data, including some very unique advanced research if you're interested in that kind of content. But for now, we're only going to focus on the grid bot. So go back up to the top, and right here where it says main, we simply want the grid bot area. And this will load only the grid bot. And you have all of the files associated with the grid bot, including information about Jackrabbit Relay, disclaimers, the introduction, all of the files provided, everything I use to generate my results. Now, this seems complicated, but it's really not. I provide plenty of examples as well when you download it so that you actually see how I've set everything up. So, once you go through this process, you will have all of my code, and I actively and aggressively update it. Most importantly, if you have any questions, please ask them. You'll get information about the Discord server where you can communicate with me. You can open up issues on either Jackrabbit Relay or the repository itself, so forth. Or even just leave a comment in a YouTube video. I read every one of these comments. So now let's get into the meat and the bones of what this video is about. The hyper-aggressive trading strategy that I've built. Okay, now that we are back in our VPS, 3,200 trades is what I have taken in the last 2 months of my research. Now, as you can see, I've got several renditions of what I've done so I can see each pair as they've traded. And the thing to be aware of is you can clearly see, for example, here for the month of November, I took a lot of heavy stop losses. But just within the time that I checked it, which was actually this morning to this afternoon, I'd already made up most of those stop losses. That is really the critical point about aggressive trading. It's aggressive. The risks for profitability are huge as long as you follow the rules carefully. And I am going to go through those rules very detailed because there are a lot of things you have to really look at during testing to get your numbers correct. So let's start with the hyper-aggressiveness that can be clearly seen in terms of just these numbers. 3,200 trades is a huge level of trading. And grid trading is by nature suicidal. Yes, I said it. The traditional context of grid trading is a mess and should never be used, except for extremely short-term situations. The concept I use here is not a traditional grid setup. It is a floating grid setup. It moves with the market. And that means if the market moves against you hard, it has to take stop losses to move the co-grid with the market. You must understand that this process is not a 100% win rate. You will take losses. They will burn when you take them. And I'm going to demonstrate that with some very critical numbers. Let's start this discussion with a defensive floating grid bot. And understanding here some of the critical elements that you must have really looked at before you can move to an aggressive situation. Because if you don't have these details down ironclad, going directly into an aggressive type of trading is going to be a recipe for disaster. One of the most critical components that you must really focus on is your position size. For example, here you see a sell order got placed, and that sell order generated 4 cents, and it sold 53 units. One of the first most critical things you have to check in your testing is when you do a complete sell. In this case, this was about 15 pips of profit. The reduction of 1 unit cost me 4 cents. So I ended up with a net negative loss because my profits weren't as much as my reduction rate of 1 unit. That really is the most critical point that you begin with. You must make sure your unit size is large enough that when you make a profit, you're able to completely absorb the reduction rate. Now you can not use the reduction rate and just take a hard stop loss when it happens. And I will show what that looks like shortly. But for now, let's talk strictly about the reduction rate. You always want the sell of your unit size to be larger than your reduction rate, and you need to remember that when you use reduction, if you're using a traditional long-standing grid process, you're liable to be 500 or 1,000 pips away from the current price. So 1 unit reduction is going to have a sting factor to it. So you'll need to make sure that your unit size encompasses whatever the reduction is. That way you always have a net positive profit after you take out reduction. So that really is the first major critical point you have to understand. Even though this is defensive, if you go through this process on an aggressive level and you don't have that positive net profit after reduction, you're going to see your account eaten alive. Now let's talk about what happens when the market goes in your direction. Specifically, this is shorting the asset and the market is going down in value. You get a very nice, healthy, and generous profitability. It's something you need to pay attention to because it is what drives the whole process. This is what happens when you go very much in your direction. And that happens roughly 15% of the market, where the market value will go the direction you want. Here, the back and forth motion, this is 70% of the market. This is where you make your money. This is where the reduction, when properly factored against your position size, really comes into a very critical point. Because if you have 100 levels in your grid and you are in a range that does 500 trades, you have burned off 5 full levels in your grid. That's 5 levels that gives you more flexibility for your grid to float and move with the market. And that really is the true benefit of reduction. Reduction lets you safely eat away the worst part of your grid and still make profits over the long term. Now let's talk about what happens when things go really bad. As you can see, here it took a stop loss. One stop loss took out $16. This particular case exhausted its margin limit, and the bot went into an emergency state, beginning a reduction stage. And it kept burning off 1 unit at a time, trying to get it down to prevent a margin call. You must understand the risks of what happens with stop losses and reduced buy. There are real-world consequences, but you have to take these in order to have a grid trading process that can weather time. It can last a year and you not having to worry about the market shifting, because it will shift with the market. And let me make it clear, this hurts. Absolutely, unequivocally, it hurts. But you have to expect it in a sustainable grid trading process. A floating grid is just as much about taking these losses as it is about the insane profitability it can make. And as you can see, it can burn off quite a bit until it gets stabilized. Now each bot has its own reduction level, and the bot clearly checks and monitors carefully all of the values necessary for Oanda's margin limits. It takes very clear, concise, and careful consideration of what these numbers are. Getting a margin call is the worst possible situation you can deal with. And you have 48 hours to either, one, fix it yourself, which is either putting more money into the account or selling off some bad positions, or two, they'll be too happy to take your money. The bot tries to follow step one and get things back under control as quickly and sanely as possible. Here is what happens when the market moves against you hard. And yes, sooner or later, you are going to have the market really hit you hard. It's gut-wrenching, it's ugly, it's painful, and it's part of the process. As you can see, I've been holding this particular position 97 days. So for literally 3 months, this position has been in my trade. The market really moved aggressively against me, and my stop loss triggered, causing a $12 loss. This hurts. When you get back-to-back losses like this, it hurts hard. It hurts aggressively, and it is brutal. You must be prepared to deal with these situations. This is exactly why you limit the amount of money per trade. So if you're trading 2 pairs in one account, 50% of your budget to each pair, and then from there, only 25% of that budget to the pair itself. This gives you room to deal with these painful situations without having to worry about your NAV going sky high and you ending up in a margin call. This is why testing with the demo account is so critical. Test, refine, get your numbers correct, because when this hits, it hurts. But as you can see from the example I showed at the beginning of the video, it quickly comes back when the market goes back into a range. So even though the market takes with these kind of brutal things, luckily for us, 85% of the time, 70% for the market being sideways, 15% for the market actually going in the direction we want, we make money. We only have to worry about the 15% of the time when the market moves hard against us. And this is an example of just that. Now let's look at what happens when the market does go in our favor, and we really see the fruits of this process go to town. This is directly what happens when the market does what we want it to do. And you'll notice if the market has slippage, you'll feel the slippage. Again, expected situations within the circumstance that you're working on. You need to accept these types of situations because they hurt. They are real world conditions you have to deal with. There is always some level of risk. Always. And having this happen is wonderful because it really brings home just how small amounts of money, and I do mean small amounts. We're only talking about pennies here, but look how quickly they can aggregate. That is the point of a sustainable, well thought out, well planned grid. Now this is a defensive bot. Let's actually start looking at the aggressive bot and its trading. Now we are looking at the logs of an aggressive bot I set up for a very specific test that talks about the second major consideration we must make. The first major consideration is our unit size. The second major consideration is the number of levels we have in a grid. I started this particular bot out with only 10 levels using aggressive trading, and it seems like it's going to work great. But there is a severe issue to it that you need to really take care of and pay close consideration to. If you don't have enough levels in your grid, you are going to be eaten by a stop loss. Even though this is only 10 levels, this is an 87-cent loss. That hurts. We've got the reduction rate reasonable compared to our profit rate, and in most cases it does well. But if you don't have your grid sized properly, the stop losses are going to destroy your portfolio. And on the other side of this, if you have too many grids in your setup, you're going to pay a huge finance fee every single day for positions that are just sitting there. So you need to take care to figure out where is the best way to actually place your grid and the number of positions within your grid to give you the most benefit without being cannibalized by stop losses or gouged by finance fees. And there is a mathematical way to determine that. Jackrabbit provides a tool that lets you analyze a market and get an idea of just what the movements are within the market. So this will help you figure out exactly where you want to put your grids and how many of them. Now it's not a perfect system because the market can always change anytime it wants, but it tells you vital information to help you think about what happens in the market. For example, the numbers we want to pay attention to is right here. 447 pips is the average monthly movement of a market. And we see that 37% of the time, the market on a monthly basis is above its average. So that gives us information that we can use. Now, OANDA allows for 500 positions maximum per grid. So knowing that the average month is 447 pips, if we're using 1.7 to 2.0 pips per trade, then having a maximum of 300 pips would cover the average, so 300 levels. Again, trial and error will give you the numbers that work best for your situation. And that is absolutely critical to understand. You need to run a demo account and figure out what works best for you. This is an aggregated process, which means you're not going to win every time, but your goal is to win more times than you lose. Like what I demonstrated with going from $9 underwater to only just a little less than $1 underwater just today alone on that one test. Aggregated hyper-aggressive trading really is profitable with the right setup. And you have to think about that setup carefully. Let's take a deeper look at some of these reductions. Here, for example, a profit was 0.007. The reduction was 0.001. So the reduction was less than the profit. We made a net profit. Same thing here. 0.1, 0.001. A net profit. This is critical. You want net profits. You want to make sure through your hyper-aggressiveness that you're slowly making money. Your budget is slowly increasing. That is the most important aspect of this whole process. You want that sweet spot balance between too high and too low, and right where you're just making enough that over time you're constantly chipping away at your worst positions while still continuing to profit at your best positions. And as we can see, as we continue looking through this, 0.04 cents, 0.001 cent. Now, not every trade is going to be this wonderful, but it gives you a clear idea of just how well things work in your favor. Here's one where the market slippage just ate us, and we still ended up taking a reduction loss. It happens, you just accept it, it's part of the risk. Either way, we more than made up for it based upon the actual profitability. And as you can see, as we continue buying and selling aggressively, and we can see how the net positive profits are adding up just within this very short cycle. Now let's finish this part up with the most recent trades this pair has taken. This is right to the minute live. You can see how the position sizes obey the fivefold regulation, and you can see how we continue making sure that we take perfect care of our profits. This is what is critical about this. And this particular grid has a grid level of 85. That means 85 steps. So when I do hit a stop loss, it's going to hurt. Here is an example of a stop loss. Considering what I'm making for a profit, that is somewhat tolerable. But nonetheless, it still hurts. So you want the perfect range where you're not taking too many stop losses, but you're not getting hit and gouged with too many finance fees. The goal for this whole process is with the hyper-aggressive trading, you want to chip away through small bits of profits so that when you do get a loss, you can literally absorb those losses in your profits and still keep going. It is a upside down look at trading by what most people think. That is, our reward to risk ratio is inverted. Our reward ratio is 1 pip. Our risk ratio is the level of the grid. If we have 85 steps, figure roughly 2 pips per step, you're looking at least 160 pip loss. That can hurt. But if you're making hundreds to thousands of trades, you're going to be able to absorb through aggregation any losses, as long as you've made the right position sizes appropriate to the balance you have in your account, and you've calculated out the significance of having 85 positions on your budget. So you will need to trial and error test with a demo account the position sizes and the levels that you want. And Jackrabbit does provide some tools for that to help make it easier. For example, one of the programs provided in the sample or in the supplemental area is called Margin Proof. This is specifically designed for OANDA, where you give it a budget, you tell it how much your budget you want to use for this asset. Make sure you never go above a 50% mark if you're trading 2 assets. If you're only trading 1 asset, I really don't recommend going above 70% because you're going to want to give your account enough room to handle stop losses and reductions. This is margins, and these values are counted as margins. So you need to think about the consequences of each of these numbers. The other thing that this program does is it factors in the finance rate that you are going to be charged every single day per position. You need to be aware of this so you don't get liquidated. Always trade with room to spare. And as we can see, using a $1,000 budget, only allowing 50% to be consumed. After subtracting finance fees, this is our allowable budget. From there, 85 levels in our grid, plus obeying the FIFO regulations, means that our unit size needs to start at 57. And then we actually see what the margin, the NAV, and the remaining are. And we can actually see how this all works together such that at full saturation, meaning we have 85 levels, we have enough left over not to go into a margin call if everything works in your favor. But of course, if you get several stop losses, that's not going to work in your favor because it's going to affect your balance. So you want to give extra room so you don't overextend your account. But through this process, you can take considerable amount of risk management and aggressive trading and come out with a very profitable situation. You can come out with a situation that will do well over time, consistently. To wrap up this video, let's take a look at the most up-to-date information for the trades. We can see that we have more trades, and we now have a total of $104 net profit. So as you can see, the overall aggregation process has its risks, but with careful planning, careful research, and judicious usage of your demo account, you can provide an incredible resource for passive profiting that has a high assurance of good stability for a long-term process. I have been using these types of techniques for 10 to 11 months straight with profitability. Some months are diamonds, some months aren't. That's just part of the game. And proper risk management guarantees you stay in it for the long term and not have to worry about a margin call. So let me know if you have any questions. Leave them in the comments, join the support server, file an issue on GitHub. All of the links that I talked about for Jackrabbit Relay and sponsorship will be available in the description. Let me know what you think. Ask questions. Thank you for watching, and until next time.